how's everybody doing? So I hope everybody's having an awesome weekend. This is 50 pips rocking and rolling here. 1st of March 2015. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the website and everywhere else. Understand that we're just performing some technical analysis in a learning context for educational purposes only. So welcome to March, everybody. Hope everybody's had a great weekend, having a great weekend. Just a couple of two things before we start. I just saw that a couple of people started to like the videos on YouTube, so I'd just like to thank you guys again. Once again, it's always nice to see the content is appreciated. And then another thing is heads up on the blog. I'll be posting some dates in the near future. We've got two interesting webinars coming up, both with DarwinX. So basically, one is going to be for the 50 Scouts crowd. So remember, as I posted that initial things we're doing with DarwinX and the 50 Scouts, what I said is, all the people who sign up with the 50 Scouts link have some special things, so they're part of the extended family. So we're going to have a webinar exclusively for those people who signed up and are trading through DarwinX there. Also, the guys at DarwinX wanted to do something special for you guys, so that should be interesting. And then afterwards, we're also going to have an open access webinar for everybody, just talking about the concept in general, the DarwinX movement. And again, I promised you guys we'd get Juan, the CEO, on here as an open access webinar to take questions, so that'll be good. So two interesting things to keep an eye out for. They'll be coming soon, so heads up on the blog. So let's get ready for this week. This week should be pretty interesting. I mean, action-packed week. We've got more China data coming out relatively soon with HSBC PMI, and then we've got all the manufacturing PMIs on Monday, right? That's going to be interesting. We got CPI flash estimates out of Europe, and also that manufacturing PMI of the US. So that's going to be an interesting start to the week. Then Tuesday, right? Things just keep on building. We've got the building approvals out of Australia. We've got a rate decision out of Australia. Again, a lot of people wondering whether they're going to cut again. I think the RBA watchers hinted that he doesn't think there's going to be a rate cut. So we'll have to see how the market is positioned there. Are they going to go the same way as Canada or not? That it was just not going to follow up straight away. We'll have to wait and see. And then we got this construction PMI out of the UK, and again another GDT price index. So auction, basically dairy auction out of New Zealand. So that's going to be very interesting. That is, if that wasn't enough, on Wednesday we got GDP out of Australia, we got Yellen speaking, we got all the services PMIs, we got ADP, we've got the Bank of Canada on the wire. So with a rate statement, again, it looks like they've hinted that they're probably not going to cut, so we'll have to see. There could be a surprise. We'll have to wait and see. And we've got the non-manufacturing PMI out of the US. Then on Thursday, we've got more data out of Australia, retail sales, trade balance. We've got, rate decision out of the BOE with an MPC statement. We've got, again, ECB. So we got Super Mario in the house also. We've got U.S. unemployment claims, and then the cherry on top of the cake, as usual, right, is not only we got all that CAD data on Friday, but we also have non-farm payrolls. So clearly it's going to be an action-packed week. And don't forget that we still have possible headline risk with Greece, Ukraine, etc., and oil. So again, it's going to be very interesting. Now, as we're going here, I'm recording this on Sunday. We're not through the open yet on Sunday night. Seeing we had another rate cut out of China, we got some other data out of China. You would expect to see some kind of attempt at a gap up on Aussie and Kiwi, but again, very difficult to call. We've got more China data coming out. You never know how these things are really going to open. So unfortunately, I don't have a crystal ball, right? So I'd be more than happy to share that with you if I did. But you'd expect them to try and do some kind of gap up action. We'll have to see what happens, okay? So looking at some charts and details, what's going on? So basically on the equity side, as we said, they just look bid, right? We're looking for tactical opportunities maybe to get short, and there were. But globally speaking, it just feels like, I don't know if it's all these buybacks coming in, if it's the central banks or whatever, but basically it just looks like there's an underlying bid tone in the market. And it looks like if we fail in terms of the next decent correction, whether that's a 5–10% correction, that's probably have to come from higher levels. So we'll have to see what happens here. But right here, you see the ES, we're kind of stuck. it's very difficult to call here. It just looks like it wants to grind a bit higher, so we'll have to wait and see. Really not that much fun when the market is so slow. We haven't seen a lot of action, so we'll just have to wait and see. But it looks like there's still some kind of underlying bid tone in the market. And the similar thing on the NASDAQ, right? Keeps on grinding higher. We talked about that 4,500 level pretty much to the upside. I think a lot of people are keeping an eye on all those psychological levels on the comp, so we'll just have to be patient. But again, it just looks like there's a bit of a grind higher tone, bid tone that's still there. Again, this week's going to be very interesting because we've got pretty a lot of central banks on the wires, a lot of stuff across the board, so that's really going to be interesting. Gold, it's holding these 1198s. We talked about pretty much that 61.8 of the move from lows to highs. And as we said, as long as we can't get any daily closes below here, we'd expect this to try and catch a bit of a bid tone and move back towards that 1250. Here you can see that it seems like the offer's trying to cap here at that 100. So we got the 100, the 200 here on the daily. So again, it looks like the market's trying to keep it in trend, try to press it lower. Again, we're not going to make things harder than they should be. Mid-range 1198, top 1250, bottom 1150. Markets looking for direction here. Daily closes above or below the pivotal level are going to guide us short-term for action, okay? What's happening on crude? Crude, it looks like we're holding some kind of a bid tone. It looks like we're trying to base around this 50 level. We've talked about the fact that basing is likely a process, and you can't expect something to just drop like from the hundreds all the way as it's dropped and just bam go right back to 80 or 70 and stabilize, right? It's a process. So right here, the way we're looking at this, we got that 4750 interim support in there, but broadly speaking, just to keep it simple, as long as we close below the 50, there's a chance that we'll try and take a stab at those 45s, and we get closes back above the 50, there's a chance the market will try and take a stab at those 55s, right? And we probably need to see daily closes outside 55. Let's make this red just so this is clearer. We probably need to see these daily closes outside the 55s to the upside, or 45, so pretty much outside this 10-buck range to see some momentum pick up. But as long as we stay in here, it'll probably be a lot of choppy trade, okay? What else have we got? So going back to, let's go back, move over to the Forex side. So not an awful lot's going on. Euro, a lot of action. We had some aggressive selling. It just depends. We'll have to see how much of that is going to be attributed to month-end flows or funky action. We'll have to see. There's a lot of stuff on the wires this week that will give us a good direction. But broadly speaking, you see that we're still stuck in that bigger chop range we discussed, right? So we've got other charts on the blog, some trading charts, but what we always said is unless we're getting closes on the week or on the day outside 116.40s or so up or below the 110.90s, which is that press down on the election, right? There's really not an awful lot to do. You'll probably see a lot of wheeling and dealing. You'll see the market looking for direction. Now, it doesn't mean there aren't pips to be made to the short side and that there aren't pips to be made to the upside, but the purpose of these weekly outlooks is try to give some kind of an outlook on the week. So here the message is very choppy inside range. Clearly, the fact that it's holding below the 61.8, that it's holding below the 112.10 gives a lot of ammunition to the shorts to say, we're heavy and we need to go take out some stops below that 111 mark, pretty much at the 110.90s. And unless we start getting quick pronto Monday, closes back the 112s, then we could give bulls a little bit more hope to try and go back towards these intermediate range highs right here where the sellers were coming in. But clearly, offers are still there, pressure still on the pair. A lot of whippy action. I think it's really important to stay nimble here and not get confused, because really there's nothing substantial that's come down that will likely change positioning in terms of the shorts or the longs, right? You could see a lot of change in terms of short-term positioning, intraday, intra-week players, but broadly speaking, across the board, the bigger shorts, unless we close back above these 116.40s, yeah, not a lot has changed. And for the bulls, looking for that to be a base, unless we close back below this low, well, not a lot has changed. They're still going to be looking for some kind of a complex base to form. So that's why we've got a lot of choppy action here. Okay. What's going on cable? Cable, so basically weekly in play, we're talking about this big cyclical weekly low for a move back into the 158, 159, 160, basically the middle of this range where we've got these two moving averages right here. It's moved very aggressively right back into the first point of resistance, previous support resistance on the chart. So normal for it, healthy, not normal, there's no normal, but healthy for it to start to pause a bit here, right? So what's going on? So right here, basically, it's similar to Euro. The case is pretty much intact, both from the bulls or the shorts, right? Because the bulls are going to say, as long we've put in a cyclical low, we've rallied all the way back into the first proper resistance zone, and now we're going to see some profit taking, right? Well, so and they're going to be looking to buy any dip for the rip back higher all the way back into this mid range. The move's completely in play, right? If you're looking at something like on the daily, what the bears are going to say, well, the bears are going to say, well, okay, that's it. The bounce is finished, done and dusted. What's happened? Extended. We're getting a bit of healthy action. It's bounced. Now it's going to hold the downtrend, right? It bounces right back into where? Previous support. That's going to act as resistance. Sell into previous support acting as resistance. And we're going to go all the way back down. We're going to break the 150. We're going to go to 148, 147, 145, whatever, right? So you see, this highlights the point that it's very tricky, when you're following people on Twitter or people are on the forums, they're saying, oh, this is going to happen, that's going to happen, I'm short from this, I'm long for that. Everybody could be talking BS or everybody could be right? Because there's trades inside trades. There'll be, from 1 minute to 5 minute, 15 minute, 4 hour, there's trades inside trades. So, but both longs and shorts can be making money at the same time. So don't be confused, right? Stick to your setup, stick to your outlook. You can and here, depending on the time frame, you could equally articulate educated views or scenarios both for the long side and the short side. It really depends what time frame you're trading, what your setups are. So anyway, to go back to what we're looking at going into the week, is focus on this. You can see on the 4 hour, something like, even in terms of the bulls, once again, to go from the bulls to the short, it's holding a nice little rotation higher. So again, there's no real right or wrong. The market will prove whoever's right or wrong, but both shorts and longs can make money. But anyway, last time, back to what we're concerned with right here in terms of this action. What I would say is that especially early in the week, if the bears can hold it below this resistance zone, then expect the market to try and test that ascending trend line, which is being bought by the bulls, right? And then, that's the first place where the bulls are going to have to defend. If that breaks, then you'll probably see the market try to accelerate lower and continue the downtrend off previous support acting a resistance, very pure little short setup, right? Basically, on the cyclical view, if early in the week we can break back above this 100-day moving average, which is a confluence with a previous support acting as resistance, then what would you expect? You expect market to continue that rotation higher, go back towards that 200 here on the daily. That's around coming in. It will be coming in probably around the 160 mark, something like that. And hey, presto, look at it on the weekly. Bam, that's exactly what we're looking at on the weekly, right? So there's a case for both. Right? There's clearly a case for both. We favor the long view, but market will tell us, time will tell us who's right or wrong. Okay, so that's a discussion on cable. Yen, what we said is the only thing we'd look at is tactically looking to buy all those dips back into that descending trend line. So all those 118, 118.50s were buy on dips for a rotation back higher, even though there's not a lot of edge playing tight inside the range, but it looks like it's got a bit of a bid tone. Again, as long as it's inside the shaded area, you could see very whippy action. 100 pips up or down doesn't really mean anything. We need to see a break outside. And and the big picture here on the yen is, if you're looking at something like the monthly, right, is pretty much that 120.15. Below, you could see a sharper correction back into the 111s. Back above opens up the room to move to the 132 or something like that. Again, very different levels, different chart monthly as opposed to a daily. Okay. Now, and again, not trying to confuse just trying to show you there's always a different perspective. There's always two sides to every story. What's going on here? EJ, right? So again, EJ, another one, very, very choppy. You can see here on the monthly, a lot of people are going to be looking at this and saying this is very bearish, looking very ugly. You've got very aggressive move down, and then this previous support is getting sold hard as resistance. However, I would draw your attention to the fact that you've got very strong support here in terms of these two moving averages, the 100 and the 200 on the monthly lining up. So the way we're looking at this is that there's a lot of chop inside this pivotal area here. So I prefer to look at a weekly rather than a monthly and saying, you know, as long as we hover inside this shaded area, much to do about nothing. We really need to start seeing weekly closes outside this blue shaded area to give us an idea for direction. But for now, a lot of choppy action, right? Well, it's just a bit tricky to call here, a lot of choppy action. What else have we got? Commodity currencies, what's going on? So USD CAD, again, we're, you know, no surprise. We've been talking about this for quite a bit since the beginning of the year, really. You know, we've been looking at some kind of intermediate top to be put. We're looking to sell all the rallies. We're looking for this to break down and come in with a healthy correction, right? However, having said that, we're still in a chop range. So for now, it's still a range play, right? You see those highs keep on getting sold. The low range keeps on getting bought, and as we said, we need breaks below these 123s here to accelerate the downside. We need break above these 128s to accelerate the upside. For now, there's just a lot of intra-range playing opportunities inside this chop zone, or structurally to position yourself long with stops below this lower range, looking for this to break higher, or short with stops above those highs, right? We've been playing the short side also because of all these, have been playing all these series of lower highs. But again, right now you could make a case for both. It's stuck inside this chop area, and we'll have to see what happens. Likely with the data and the BOC on the wires, we'll have a decent feel for this. But again, especially if the BOC, as they hinted, they're not going to cut, if crude catches a bit of a bid, we could see more tests to the downside. Let's see what happens. Then Aussie and Kiwi, what we've been talking about on Aussie, again, a lot of people being extremely bearish. I think a lot of people are selling this hard into the hole, and what we're saying is just caution there on that, on this Aussie. Broadly speaking, there's a lot going on, and unless we see a break back above the 80 level or back below the 76.20, we think it's a big chop zone. It's a big chop sideways trading range, fairly large, but again, we're looking at a monthly chart. Okay, our favorite play has been playing to the upside for a move back into the 80s, as we've been talking on Twitter. 80s attract, 80s attract, 80s attract. I think this week will probably be make or break in terms of we'd expect 80 or 76.20s to get tested with all the data coming out, not only from China but also from the RBA. And if you look at this on a 4-hour, you see it looks like it's a very choppy action, but it does look like it's trying to rotate back higher. We'll have to see. There's just a lot of choppy action, but we'll likely see some kind of a play in either direction with all the data that's coming out. And last but not least, what's going on with Kiwi? Kiwi, again, if you look at it on a monthly, we've been talking about this for ages, and we're saying, chop zone right here, on the move back into the lower, into those 73, 72s, we're looking for clues back above. So basically any move back above those 73.60s to indicate a short-term bottom, and we've been calling this on Twitter a lot, 76 attract, all the way as soon as we move back above those 73.60s. And that's what's happened, right? But again, at the same time, those 76s are a massive resistance here. Previous support acting as resistance, and that's going to be the bull-bear line going into the week with all the data and all the stuff coming out. So what we would say is daily closes below 76.00. It's going to hold heavy, potentially 73.60s attract. Daily closes above the 76s, then you'll see us starting to call the 80s attracting, move back into that higher zone. And you could see this also on right here on a daily. Again, very nice structure play. You're seeing this on the day, similar to cable in a certain extent. We've come right back down, we've rallied all the way back up, and now you've got sellers coming in ahead of this 100 DMA at previous support acting as resistance. Fairly pure sell signal here for the bears. Again, we think there was a lot of month-end wheeling and dealing, so we're not paying too much attention to that. We'll have to see how we open on the week. We're still favoring the bull side, we'll have to wait and see what happens. So again, that's pretty much where we stand. We're going to have a lot of trading to do this week. There's going to be a lot of stuff, a lot of event risk, a lot of headline risk, a lot of data risk, a lot of central bank risk. So stay nimble, keep it tight. And again, I think what we tried to do here is to give you some different perspectives, looking at the bull, the bear side, and try to show you nobody has a crystal ball. You can usually make a pretty good case for both sides, short or long. Just stick to what you're trading, stick to your setup, stick to what you know works. Hopefully what you've tested works, and that's what you're taking live. And don't get confused by velocity of moves inside range. Don't get confused by other people. So again, as always, thanks for listening, guys. I wish you a great rest of the weekend wherever you may be. Have an awesome week, and I'll see you guys around for London Open. Have an awesome one. Thanks for listening, guys. Bye-bye.